You have now an hour or so, 60 minutes to go through that payrolls report. Your thoughts, please.
Well, I do think that the banking sector stress is front and center here, and I think it's a good reason because the payroll report is frankly lagging. I mean, that basically tells us what happened last month, and we always know that the labor markets do lag broader fundamentals in the economy. So I think from the Fed's perspective, really the question here is how tight financial conditions are getting as a result of this risk aversion, stemming from the Silicon Valley bank stress. I think the other issue here, obviously, is that even though, I think the liquidity, a potential liquidity crisis in the banking sector is, I still think the probability is that is low. It probably does cause some risk aversion, with bank managers. I mean, are they going to start pulling back on the margin on credit, start tightening credit conditions a bit more, and that's basically doing heavy lifting for the Federal Reserve. So that just means the Fed doesn't have to do as much. So I kind of agree with the markets here in terms of, taking out the probability of 50 basis points.
So Tiffany, we're saying that before we get CPI on the 14th. Are you saying that the bar for CPI to deliver or at least open the door to 50, case closed, is that really, really high?
Well, I mean, obviously, the stress, some of the stresses that we're seeing in markets right now, it's a question of how persistent are they? If we're coming into next week and if people feel more confident this is an isolated case, you don't get the risk aversion, financial conditions aren't tightening as much, then certainly the CPI report, I think, will take more significance. But our own expectation for this report, is that it's kind of core CPI is going to be kind of where it was last month, and we actually do see some reacceleration potential, over the next couple of months as you have used car prices, that look like they're rising again, which has been kind of an idiosyncratic issue in the United States. So I think it's the bottom line is it's a tough job for the Fed right now. I think they kind of set out a plan for going 25 basis points to kind of weigh the different risks. They don't want to tighten too much, but they don't want to tighten too little. That still seems like a reasonable plan for me.